Today is July 31st, the very last day of July, and it's in the history books. On to August, and then of course what everybody's waiting for, the fall, when all the action kicks in. Well, we don't necessarily know which way the action is going to be, but we can tell you this: it's going to be exciting. That's really what I know. So today being summer and almost in August, it kind of felt like a summer day today, and we'll get more into detail about that. Andy, what's been happening on your side of the fence today?
Hey, what's happening, Jamie and Scott? Great to be here. Yeah, not a whole lot. Got some interesting stuff to talk about today, but I know what you mean by it's kind of a mundane day as far as the action goes, kind of light, and we'll jump into that here when we start talking about the market recap for sure.
Exactly. So before we get into the juicy stuff, let's take a moment to take care of make sure the lawyers don't go insane. And just want everybody to be aware that everything that we share with you guys in these webinars is for educational purposes only. If you need investment advice, what to do, when to do it, all that stuff, please seek out a registered investment advisor or another licensed individual that can give you that type of advice. But nothing we share with you guys in these webinars needs to be construed as a solicitation to buy or sell not only stocks but anything. So I think that pretty much gets the message across. Before we move on, for the new people, you might be brand new attending your first webinar. Just want to take a moment to let you know what all we have going on here in the TI community, not just the award-winning, only in its class basically scanner for the markets, but we've built a nice little community around that technology, which really sets us apart from anybody else trying to take on a task of this nature. So it all kind of starts out with what you see up top here, Barry's trading room, moderated by Mr. Barry Anderson himself. That room is free. You do not have to be a subscriber to participate. So whether you're a current subscriber or thinking about it, kicking the tires, you can't go wrong by attending Barry's trading room. So take advantage of that resource. Of course, today's office hours with myself. Usually we have Steve riding shotgun, but he's on a well-deserved vacation, kicking his heels up in Cabo San Lucas. So, Steve, hope you're having a good time, buddy. We miss you.
I guarantee you he's not on this, right?
Yeah, exactly. You might as well not even take your phone. But of course, you're all addicted. You can't not take your phone. But anyway, minimal screen time for Steve, and if he does engage, it's only for entertainment purposes. Of course, trade of the week is usually what Steve does tomorrow. Of course, it's going to be myself, yours truly, and Andy again for tomorrow, continuing with the education. On Wednesdays, we bring in Dan and Brad, which changes up the pace a little bit. Dan is the CEO and founder of Trade Ideas. Brad's been pretty much with him not too long after the founding. He's the chief technical guru in-house, so it's always entertaining with those two. Then Andy usually shores everything up on Thursdays with his trading studio, and I ride shotgun with him. Now, we used to not have anything on Fridays, but since we're continually trying to improve not only the technology, but the environment in which people exist and learn how to use that technology, we've got the Friday support session, which has become quite the hit. And we do that every Friday. It's an open forum webinar where you can just come in and ask away, no matter what the topic is. Well, I can't say no matter what the topic is. We don't cover some of the more advanced stuff right now. But for good old support, hop into that Friday support webinar. It's myself and Andy and Steve. And of course, it's entertaining as well. So trying to keep it interesting, trying to keep education on the front burners, and we never stop learning. One more little peek here. Just want to show everybody that's why Scott does those polls in the beginning of these webinars, because we try to listen to what people are doing and adapt accordingly and make things even smoother moving forward. And we always like to show this because once we introduce the AI, you can see what's happened to our subscriber base. It's inverted, right? Where it stops, nobody knows, but that lets us know that we're doing something right that's resonating with the user base. All right, so as always, I'm going to pass it over to Andy here in just a second. He's going to do the market recap. Then we're going to get into Holly, of course, as normal. And very interesting things to have observed today, because really what it boiled down to with the way the market was today, it doesn't matter if your trades were generated by machine, you know, whether it was man or machine, it didn't really matter, because as far as follow through to the upside, most of these stocks were pushing through and going up nicely. But boy, if you didn't take those cookies, boom, they pulled them right back. And before you know it, whether it's a big cap, small cap, or anything in between, if you didn't take those cookies, you're right back down to flat. And of course, as always, there were a couple of exceptions from some of the more popular windows that we like to watch and teach that kept going today, but not near as many as normal. And we'll get into that, because the compare count windows were the true peak into what the future might yield. And if you were prepared mentally by reading those numbers, well, then you were geared up for today. You were ready for the action. You're like, okay, I know when I see these readings, there might not be a lot of follow through. So I remember what Jamie always says. It's one of the take the cookies when they're passing them day. Next time the plate comes around, just a few crumbs, if anything. All right. So having said that, Andy, if you're ready, I'm going to pass the baton over to you.
All righty.
Look at some of these major indices today, and give me 1 second here. Okay, why are you doing that to me? All right.
Do you want me to grab it?
I think I got it now.
Okay.
Emphasis on think. All right, here we go.
There we go. And can you see my screen?
I can.
Perfect, perfect. All right, guys, let's talk a little bit about the market, and we're just kind of going to look at the overall picture there. I mean, nothing has really changed in the grand scheme of things. We're still in a nice little upward trend, and pretty much all the averages. Well, I shouldn't say pretty much. I should just say all the averages. You know, the spiders, we broke out of this level right here. This is a kind of a range that we developed over several weeks here. We looked like things were going to roll over, and lo and behold, we fought back up. And remember, this was on very, very little volume. It doesn't matter. We always say price is the only thing that matters, and we've been seeing this for a long time now, where the stocks move up on lower volume and they sell off on more volume. But nonetheless, we got above this range right here, and now we've had pushed, and we've been kind of just chopping sideways. You can see there for the last 7-8 days now. It's just it's actually tough for trading. It's tough for intraday trading when you don't get any movement out of ranges. It's hard to kind of pick a direction, and we talk about this as a good time to be very, very selective, or to sit on your hands. There's a time to be, aggressive when you're breaking out of ranges, but when you get this sideways action like we're developing here, I'm not going to draw a line at the top of this range. I could, but maybe we'll get some more data points where we'll have a more defined resistance. I consider this kind of still in the up move, but if we do kind of move sideways for a while, or what we might want to do is bleed back down here and test this breakout again. That's very common when you're talking, even if you're talking about individual stocks or indices. Anytime you break through a major resistance, they tend to want to come back and test it. It's like we have to test it. Right here, you saw it. Breakout out of this range and set a high there, came back, boom, tested that to a T pretty much. Just break out a little bit. Probably make that more like that. Tested it a couple of times, and then we went forward. So don't be surprised if the market does. But for the most part, yeah, it's summertime, kind of sloppy trading right now. The volumes are kind of low. Well, we'll take a look at the Qs, because surprisingly enough, they broke out of. Could you go on mute? Your keyboard, Jamie, is kind of.
No, that's not me, Andy.
Oh, okay. Maybe it's got. Okay. All right. So this is a range. It was a pretty nice little defined range there, the resistance level in the Qs that we broke out of. but lo and behold, now we tried to break down a couple of days, but bounced back to close right at it. But today, we're back into this range. So I know the bulls for the tech-heavy NASDAQ stocks would like to see this back above this range pretty quickly, or it could be like the IWM, which I have been talking about this for a while now, just saying that, this, I have no interest when I see this kind of sloppy pattern just keep kind of breaking out and coming back. And once again, we did it again. A lot of people got excited. Okay, the IWM is off and it's falling right back in this range. I am not real strong on small cap stocks at all right now, but it's because I keep seeing this pattern over and over again. And, it's, I don't know. I think it's foolish just to keep going back, hoping this is going to be some sort of continuation move when it continues to fail miserably. All right. All right, let's take a look at the diamonds. A different story there in the diamonds. Of course, we very limited number of stocks that trade in this indice, so I don't spend a whole lot of time here. But nonetheless, I have to point it out. Gap up today. I'm not probably sure. Probably somebody's earnings. I didn't check them thoroughly this morning, but gap in a doji in the diamonds. So for the grand scheme, nothing has changed. The pattern is still very bullish. The Qs may, like they did back over here. That's just something to keep an eye on. When the Qs got weak over here, the other ones started to kind of bleeding off after a certain amount of time. So I want to keep an eye on the Qs. Amazon, a big component of the Qs, had a very kind of ugly day today in Amazon. So I think that probably had a lot to do with it. But Jamie, unless you don't have anything to add, yeah, there's nothing earth-shattering here about the market recap for sure.
You hit the nail on the head, Andy. There's nothing earth-shattering about the day in general today. It was just kind of what we normally refer to as kind of just a sleepy summer Monday. Of course, we all know the summers used to be like this all the time, but we're not in that environment anymore. Things can get heated up a lot quicker here lately. We don't just have the summer zombie market that we used to, but it's all staying within the range as your SPY chart illustrates here. Yeah, we had a couple on Thursday, that little downward swoon, but that wick tells the story. Didn't stay down there for very long, and it just kind of looks like we're building a little sideways action here. So nothing fantastic to speak of right now. We got Tuesday, Wednesday, Thursday. That one of those days will probably have some decent action. Now, will that be up or down? Don't know. And of course, maybe I'm wrong, but usually there's one day a week where we do have some good volume and some good follow through, whether that's to the upside or the downside. So yeah, that's pretty much it. Okay, so stand by.
All right.
Just wanted to let the jet airplane fly by there before
I heard that, yeah.
Off mute. And now let me grab the helm one more time, and we will get into the nitty gritty. Okay, here we go. All right, so I saw a question from a user was kind of asking what the topic of discussion would be today, and as Scott so accurately put it in the response to the question there, yeah, the Friday webinar is more for, hey, can you help me customize this, or what does this do, or I need help with a configuration, whereas these webinars, for the regular attendees, you know exactly what I'm talking about. We run the risk sometimes of getting a little bit boring because, as Steve and Andy and myself, we all like to say, we're going to always talk about what's been working. And if it continues to work, then we're going to keep talking about it, right? Because, well, that just makes a lot of sense. They say there are no guarantees when you come to either trade the markets or invest. There is a guarantee. And that is what you have that's kind of working for a little bit. The guarantee is that it's going to stop at some point, right? Now, there are some things that are out there all the time that if you get proficient at reading them and playing certain patterns, well, those animals are in the forest every day, right? So when we're trying to establish consistency in any type of trading program, it kind of makes sense to focus on the things that are there each and every day. But as today will show us, when we get into what I'm about to show you guys, once again, I have to revert back to the hunting analogy. if we're going hunting, we know what we're hunting before we ever leave the house. We make sure we have all of our supplies, and then we wait. And on some days, there's a lot more game in the forest than others. And if we know what to look for, we can prepare ourselves mentally, assuming, not too much noise scares the game away. Okay, so let's talk about that. So first, we're going to talk about what our AI did today. Holly, she came to the party with 10 strategies. 7 of those were longs, 3 shorts, and then total of 13 trades. Pretty much no surprise here, all to the long side. But Andy, the interesting thing is that some shorts made the cut and actually fired today, and I think actually made money, right?
They did. They certainly did.
Don't think, just do. All right. Okay, so before we get into the Holly recap, let me just put it back on this slide here, because for you regular people in attendance, hopefully you were able to do and apply what I'm about to show. And for those of you who might be new, we've got these great windows in the product called Compare Count Windows. Now, this is a screenshot of the Compare Count windows that I run every day. And what these guys are doing is we can customize these to look at selling versus buying in a wide variety of metrics. All right. Now, these are simply looking at stocks hitting highs and lows, but I've got them partitioned into certain market caps. So we can see over here, this is stocks below $2 billion in market cap, stocks between 2 and 4 billion in market cap, and then I've got one here above 4 billion, and then I've got a bigger one over here above 5.4 billion. Now, these have accelerated volume metrics built in based on the theory that seems to be pretty cool of tracking where the big boys are going to be playing in the first 20 minutes. Because let's talk about the open real quick here. Everybody knows that's been in the chair for, it doesn't matter if you're a month old or 10 years old, what happens at the open. Boom, the open hits, volumes are insane, things are whipping all over the place. We can equate it to, okay, Hoover Dam every once in a while has to open up the floodgates, right? That's what the open's like. They just open the floodgates, huge quantities of water come gushing through. Then as time progresses, they slow the flow down, and then pretty soon it's just a normal trickle. I mean, that's exactly the way the market opens. It's madness in the first 5 minutes, or the 1 minute, 2 minute, 3 minute, 5 minutes. And then after about the 15-minute period, things start to normalize, we could say. Now, the thing about institutional trading, and when I'm talking about institutional trading, I'm talking about the big boys, the big institutions, the big players. Of course, it's 4 or 5 banks I could rattle off. Everybody knows who they are. And then, the hedge funds and the quants and all this stuff. So when there's going to be institutional selling in a stock, they know it before the market opens, right? So a large, huge blocks get done on the open in the first 5, 10, 15 minutes, but they can't get the whole institutional order done, right? But they'll get a huge chunk of it done. That leaves footprints in the sand that I'm using to track with these windows. Now, they get a certain part done, and we can say, okay, well, compared to what is normal in the first 20 minutes, and by the way, after the first 20 minutes of the open, that's when I snap these right here. And that's what I like to use, 15, 20-minute period. So what were these windows telling me today? Well, over here on the 4 billion and up, very slight buying bias. And usually if it's under 55%, it's one of those days where you're going to have to be very selective. The stocks are going up, but guess what? There's a good chance they might come right back down. So that lets us temper our expectations. Now, we also see over here between 2 and 4 billion, that's a significant selling bias. That's a significant selling bias in the sub 2 billion category, 59 and 62% over here. Right off the bat this morning after the first 20 minutes, that's very good information to have. So maybe you don't play these. Maybe you stick to the big caps. Maybe you just don't care. But if you know that these market caps right here are experiencing this amount of selling in the open, that's good information. So, you know, a lot of people don't even like to go short right now, or maybe you don't have enough experience to go short. So what does that leave us? That leaves us on the long options. So we know that there's going to be movers over here in these categories today. But once again, we've got selling over here. We've got barely a buying bias in both of these categories. Okay, there will be good long setups, as there always are. But the ride that you get up, you better step off and take your single or your double, right? And I'm using the baseball analogy there, right? It's a single and double day. You try to stay in, hit that triple, maybe an in the park home run. You're going to be going, oh, I was up 80 cents and now it's back to flat? What's going on here? To see if you get proficient at setting up your expectations by reading windows in this capacity, then you won't be sitting there going, well, I was up 80 cents. I went and ate lunch and I came back and I'm flat. You know, of course, getting in the money is half the equation, managing accordingly based on what we think may happen in the day, the other part of the equation. Now, having looked here and saw, okay, minimal, barely a buy bias at all in these guys and big selling over here, not just big, but significant. All right, so let's do this. Let us consult ye old great magnet, which is the SPY. Everything moves to the whims of the great magnet, whether it's part of the index or not. So these are 5-minute candlesticks. 5, 10, 15, 20. Look when I'm being fed the information that there's big selling biases in the mid cap to under 2 billion market cap place. All right. So we're right here when we get that information, and look what happens. All right. So once again, if we were watching those windows, having that information at this point in time could have proven to be very, very valuable. All right. So we know that there might be a downside bias in the overall markets. There will be good long trades, and if we do spot those, we better be quick to take our money and not let them wiggle around too much. All right. So let's take a look at Holly and what she did today, because even in the face of a declining market, Holly going predominantly long still didn't turn out too bad today. Now, it was definitely a risk-off day, which coincides with, hey, take the cookies, don't want crumbs. So we're seeing that not only from one set of metrics using the compare count windows, but as we were watching Holly do her business throughout the day, those metrics, those ideas were being confirmed, because if Holly was holding, which is what risk on is, we can see profit down, and then finally the big drag. If you're trying to hold longs all day, not going to work. Cookies turn into crumbs, and even negative cookies. Oh, you want a cookie? How about you give me 2 instead? That's not going to work. Of course, as traders using proper risk management, we don't want to let the green turn into red. That's one of Holly's, prime directives is once it's green, you can't let it turn red. And that's what the risk off chart was telling us. We can see she finished the day after her little assortment of trades here, up 99 cents on that trade count, which isn't bad considering the fact that at one point we were a lot higher today, approaching even the 2-point mark. All right, so here are the short strategies. Interestingly enough, this little guy went 2 for 2 today. Power hour short in the last hour. And usually when we have a nice up day, which today was not, we usually focus on the risk on column, because those are the numbers that say, okay, if you would have held this stock, you'd be up this much. And usually there's a nice spread between risk on and risk off. Of course, today is a little bit different, since it was risk off, which is, by the way, for anybody hearing this for the first time, what is risk off? It's just Holly obeying her rule set. versus risk on is Holly just getting into the positions and holding them indefinitely until the end of the day and watching that P&L ebb and flow. People might get confused in the beginning and say, well, what do I pick, risk off or risk on? And that's really a trade by trade decision that you'll have to make. But the short story is, if you're in a trade and you see Holly getting out and you think the chart looks conducive for more upside or downside, depending on if it was short or long, that's just you going, okay, Holly, I see you getting out, but I'm going to stick in here. I think I can make a little bit more. And usually the game we play is risk on, risk off. You try to make something in between, you know, which I added the max profit column also to illustrate the power of the statistical system, which is Holly. So before we talk about these numbers in this column here, why is Holly so cool? What separates Holly from any other type of window that might be in trade ideas or any other informational stream that you're getting from any other source out there that pertains to trading? Well, the simple answer is she's very unique. She is a highly advanced system that not only, well, let me backtrack there. In the beginning, there was the backtester. And Jamie and Dan and Brad and everybody at the firm loved the backtester and would use it incessantly and find good things to trade. But what they all figured out after a while is that, man, I found something good that worked and it stopped working. So then we go back to the drawing board and we quickly realized that, guess what? Just because you go back to the drawing board does not guarantee you're going to find anything that's useful. So after those trials and tribulations, we said, okay, well, this is really hard, all this scanning. It just takes way too much time. So what can we do to improve things? Well, the idea that we create a software, an AI, mind you, that does all that for us. Not only backtest way more than we could ever hope to, but also try to improve the strategy and retest it and see if it improved it. And if it did, it keeps it. And if it doesn't, it kicks it to the curb. And that's how Holly was born. Statistical probability. Everything that comes out of these strategies is weighted statistically before the session ever begins. So we know what our statistical probability is here today. So just as we were saying earlier about a lot of the things that myself and other traders spotted manually, boy, they started off like gangbusters. But eventually, they were traced. Whether you were a man or a machine, it just didn't matter. So let's take a look at this little play right here that Holly issued from the strategy called Nice Chart. So when we look at Nice Chart, we see it came into the session with 63.9% probability. That is a huge statistical advantage because we just want to get above 50. But the more we get above 50, even better. The more you get above 50, you know, your spread between winner and loser can actually go down a little bit. You know, if you have a strategy like this guy down here, 51.7%, well, his average loser is a lot bigger than his, his average winner is a lot bigger than his average loser. The spread is bigger, whereas the more, you know, highly weighted things might not be such a big difference. But this is very powerful stuff. Nobody else is delivering statistically weighted entries. And that really is what Holly is. Her strong suit is bringing us statistically weighted entries. Because most of the time, from a technical standpoint, we're looking at a chart, it's meeting our pattern, so we're saying, yes, let's do it. And a trade can work on that technical merit alone. But the more positive factors you can use to reinforce what you think might happen, like volume is one, and statistical probability is another. So a lot of the times with Holly, she delivers the statistical probability, we pull it up, we go, this RDUS, not only is Holly recommending a buy right here, but it's matching up with my human eyes, and I can see right here, this is a range break. So now I'm coupling statistical probability with a pattern. That's gold star 1, gold star number 2, and then because I have all this information on my screen, I can quickly look, okay, statistical probability, huge, pattern, I like, gold star number 2, and we can see what the volume levels are, whether it's the 1 minute volume, 5 minute volume when the market is open. So a lot of times we can get 3 positive factors behind a trade, and ladies and gentlemen, when you start doing that, things change. And of course, I can tell you that, but it's even better for you to see it, experience it, and then get to know it, right? So we can see Holly, great trade. I mean, off to the races, doesn't even throw a wiggle, all the way up, but if we didn't take the cookies, all the way back down. So Holly, since we've programmed her to not let a winner turn into a loser, we can see she got out of that trade on profit save, made 38 cents on it, and of course, trying to hold it to the close would have yielded a loser of almost a point. Now, what I'd also like to point out is the max profit column. Holly took 38 cents. She's not real good at getting out of trades, simply because, well, that's just not her strong suit. Her strong suit is the statistically weighted entries. We're a lot better at getting out than her, but we had to program her to not let a winner turn into a loser. So, very good example of just an average long trade in the market, whether there was volume behind it, whether we had the chart behind us or not. If we didn't take it, came back down. We could have, you should have been prepared for that if you're watching your compare count windows. If you're not watching compare count windows, by all means, I'll drop that assortment of them into the chat area, and if you are a subscriber already, you can just load those cloud links up, start watching for that information, start training your brain to receive it.
And not only that, Jamie, what you can do, if I like to watch the spiders, and you can see the day starting out, with some pretty good selling right at the get-go in the spiders, and never really recovered and never got anywhere close to highs, and just kind of vacillating back and forth during midday. So if there's really no upward momentum in the market, maybe you want to make your stops a little bit tighter. And going back to that RDUS, you might just use a simple 5-minute reversal, and that would have probably saved you 20 cents. I'd have to go back and look at it, but right there where you had 4 consecutive green bars in a row, and then you had a little inside red bar, and then maybe if you're using a bar reversal strategy, since the market is not, you just don't feel a sense of real buying going on in the market by looking at the compare counts of the spiders. It's just a way, guys, to maximize your profits by taking in the whole market and not just focusing in on what is Holly doing.
Right, and expectations, Andy, because expectations, if we don't have proper expectations, I mean, what kind of way is that to go about the trading process, right? We don't want to come in with preconceived notions going, I know this is going to do this because, well, I want it to, We just go, okay, I'm about to go on a walk. Let's see, what's the weather like? Oh, it's nice. I don't need a jacket. I can wear shorts. Okay, I'm good to go. This is the same thing, right? It's kind of like the other day when the storm blew in on the SPY right here.
Yep.
Everything was fine. We were hunting. We were bagging some game. We were making some money. And then all of a sudden, this horrendous storm moved in, right? What are you going to do when the storm moves in? You're not going to sit there. You're going to pack up and go, hey, there's a storm coming. We better pack up. We'll come try again tomorrow. And that's, setting expectations in the first 20 minutes of the market is very healthy from a mental standpoint, right? And of course, this game is brutal, and you have to be prepared for it. You have to train for it, right? It's just like running a marathon every day.
Sure.
If I don't work out and I don't condition my body and I get out there and try to run a marathon, I might just die, right? Or take that out of the equation. You're not gonna feel good, believe me, when you try to run a marathon with no training. It would just be ridiculous. Nobody would even try that because they know how ridiculous that sounds. But do you know how many people leap into the arena called the market in similar condition and then wonder why things went wrong? A lot, a lot. So we can avoid that just by being practical. Hey, if I can read these windows and give me a kind of an idea of what's going on under the rug approach, why not use that information? Now, we did have a nice little runner today. Okay, so the RDUS at one point in time was up 96 cents. Arch Coal today, I mean, what a beautiful little entry. A little bit, you know, there was nothing special in the eyes of Holly until it got up here. Don't really see anything, you know, a little range break action. And then, you know, why did Holly decide to get in here? Well, that was, once again, the nice chart set of filters that she had identified that. And, you know, let me kind of backtrack on the Holly strategies. A lot of people might think that, well, it's an AI, it's probably adjusting in real time as the market unfolds. No, that's not how this AI operates. The AI is doing all the hardcore analysis the night before. So you can look at all of these strategies that show up as a perfectly formed little geometric shape, and only the right animal is going to fall down in that hole, right? It's kind of like pegs and squares and little weird circles or whatever. You can equate it to that. It has to be a very specific thing to fit all the little ratchets or, you know, little holes fit in there perfectly. Now, sometimes they happen a lot more frequently, sometimes not. But just as Andy and I were talking about expectations and how you have to use tighter stops and whatnot, see, that's a thing that changes every trading session. Things change every session, so it's more about expectations, and then when we have these expectations, we have a certain way that we act when we see certain conditions unfolding. Just like Holly, we may see power hour short show up again tomorrow, or breakout, or any of these strategies show up again tomorrow, but guess what? It won't be the exact same. It's the same base, but certain things will have been changed based on what gets factored into the database tonight, all the things that happened in today's market.
Mm-hmm.
So you see,
and real quick,
the way you're going to have to maneuver in a day is different every day, just like these strategies are different every day.
Mm-hmm. Joanne has a question, and I was about to hit on this topic, Joanne. I'm glad you asked it. She says, how to look for what sector is Arch in? Well, like you said, it says coal in the name, and if you would have been watching your sector watch list today, you would have noticed that coal was right up there at the top. And right there, you can see in the name, it's, yes, I can tell you it is in the coal sector, and very important to be aware, you know, when you, and I love to marry up Holly's calls because I know I have the statistics behind now what I already know is a strong sector.
So Andy, you know, you're probably thought the same thing. When I saw Arch Coal trigger and I saw it was a Holly trade with good statistical probability, I'm like, it's a good trade in my mind, because we all know that energy stocks, whether it's oil or coal, a lot of the times they'll run counter to the market going down.
Exactly.
You know?
That's right.
And of course, that's just kind of, you know, once you've been in the chair long enough, you start to make these connections, just like, you know, when you'll see maybe last week, Boeing broke out, tried to head higher, kind of fizzled out. But guess what? That was on my watch list from last week. So look at what Boeing did, you know, today. You know, it had a nice little run up, but then of course, just like everything, if you didn't take the cookies, back down again. But the only reason I need to watch Boeing this morning was because I thought it might have a little carryover from last Friday when it was, you know, trying to get out of that range there. Of course, when you notice one of these big boys, you're like, well, you know, I better keep my eye on some of these other plane makers, or sometimes it's the exchanges like ICE and CBOE. But, you know, as you spend more time in the chair, you'll be able to make those calls quicker and quicker. Now, before we move on here, I want to point out this max profit column. Because look, every trade today, was in the money. This was the worst one. It was always a flat before it went down. And of course, not a stock that's really, written by points or whatever. I mean, from here to here is a dime, right? So every other stock was in the money at some point on this many trades. Now, that's impressive, all right? Because for anybody to put on this amount of trades and have all of them be in the money at some point, it's not so easy. But Holly did it today, all right? So just keep that in mind. In the future, when you're watching Holly, remember what we're talking about here. Okay, nice chart. Keep in mind, this is the strong suit. Nobody else is doing this. Every play that's delivered to me has statistical probability. It's the closest thing we have to certainty in the market. All we have are math, statistical probability, and the footprints in the sand, which tell us where the price has been, and then we can deduce where it might be going. But, when you talk about the bare essentials, distilling everything down, that's what you're left with. All right. Any other thing to add about Holly today, Dan?
No, I think you covered it pretty well. Yeah, that was. I mean, for a very sloppy day, I thought I was impressed with some of her calls today. So, just a couple of trades that didn't work out, or it would have been a lot better on the risk off for sure.
Right, but I'll just cap this off by saying, Holly, same thing. If you didn't take them, they regressed back down to the entry line, and some of them even went lower. And also, too, if we were monitoring this window, which shows us all the stocks that are breaking out, it was the same song and dance with these guys today. They were hitting highs. They'd have a nice little run, but if you didn't take the money, TWU is one of the examples that actually finished higher. Let's see here. We're going to go over some of these charts. Okay, so if you follow my Twitter stream, I'm QuantBot on Twitter. What I try to do every day is tweet out some of the nice tight patterns that this window here is generating, because they're the ones that are at the all-time highs on their lifetime. So there's nothing for them to bump their heads into as far as resistance goes, which doesn't guarantee anything. But when we look at a stock and it's in blue sky and we're able to make a nice intraday entry off of it, well then, path of least resistance, in other words. So we can see AAP, boy, he got frisky. He tried to bust out here. Nope, not gonna work. Gonna go sideways for a little bit from that entry point and then keel over, right? Now this next one is one of the little guys that kept going today, because on any given day there are these stocks that keep going, but most of them we're gonna roll over today. Little NE, when it busted out of this area right here, he just kept going, set up another time, and continued as well. And of course, our good friend Boeing, we had that nice little run, and even on the big and mighty Boeing, 5.4 billion cap and higher. Matter of fact, I kind of think that's wrong. I'm looking at float. Yeah, 142 billion. I'm like, there's no. I recently rearranged these guys. But in any case, we would see the same old song and dance. Fiserv acted like, oops, my fingers are getting ahead of me. Fiserv broke out a little bit, gave it back, and then, finished higher. Classic example. It's just, a lot harder to sit the wiggles on a day like today. But we had some other ones. What was that other one? Let's see here. Fiserv went. Where is it? I think this other little guy had a nice run. Yeah, and Serve, I thought this guy was going to keep on going, but see, once again, just doesn't really matter how mighty the move and the volume was, because this guy was really motoring. And then, gets up here. Nope, not even going to take a little pullback. Whoosh, whoosh, right back down. So there was a lot of capitulation off the tops here on these short runs. But the beautiful thing about it, ladies and gentlemen, and the biggest takeaway today, is that if you were watching the compare count windows, then you had programmed your expectations for this type of activity. Okay, I'm going to wait. I don't want to, I'm going to wait and see, when it feels like they're really starting to pull back. Of course, that's going to be a little bit different for everybody, but you would have had decent expectations on risk management today and when to get out. All right, so before I forget to do so, what I'm going to do is I'm going to make sure I put the right versions in here. So bear with me while I load these up from my cloud.
Okay, while you're doing that, I will answer Mika's question here, asking about the sector watch list with a question mark. Where is that? Mika, that's something we're probably not going to have time to go over today. I mean, I could show you, but the problem is you have to have a symbol list associated with that. So if you would, I will make a note to discuss that in tomorrow's webinar. If you can't wait until then, you can email me at andy@trade-ideas.com, and I can send you that information. But if you don't know what you're doing, it may be best if you hold off until the webinar, and I will go over that. I'll make a note to go over that in tomorrow's webinar, so that way I can not only give it to you, I can explain what to do and how to load the symbol list and all that, and plus I need to copy my symbol list for you. But yeah, it's just a way to keep an eye on how the sectors are performing during the day, and to know which sectors are hot and which ones are not. And it's good. It's always good to have a sector watch list. But if you are new to trading, you're going to have to learn the stocks within those sectors, and that just takes time. There's no shortcut to that. You can make yourself little cheat sheets, but over time you will memorize many of the stocks in those sectors.
All right, sorry, ladies and gents, just had to restart because one of my windows did not want to cooperate. Give me 1 second here, and I'll have that last one moved in. Just looking for the small one. Where did you go? There we go. Go to webinar. It likes to hog up my desktop sometimes. There we go. Okay, and that's the 2 to 4 billion, which leaves us one more.
And for those of you guys who may not know, he's dropping it into the chat window on your GoToWebinar dashboard. So you can if you find the little chat segment, just pop that out, and it's easy to see it if you just pop it out of your dashboard there.
All right, and here comes the sub 2 billion. Okay, so yeah, take the time and load those guys up, and just, you don't have to have them very large. They can take up a relatively small amount of space, and then just take a peek at those guys 20 minutes into the open. See what happens. It's not a magic 8 ball. It doesn't always call. Today it did line up kind of with the down move of the SPY. That happens sometimes. Obviously, if the market just tanks, and if we see red bar, 5-minute bars in the opening flurry, well, then there might just be a correlation. But see, today it's really interesting when the market hasn't really moved yet, and then you see the down move. Sometimes that's going to happen, and sometimes you can capitalize off of that. But just keep in mind, whether the initial move reflects it, that's not the most important thing. The most important thing is what might happen the rest of the day based on the data that you've taken in, right? So just keep that in mind as you move forward. Yes, and I will drop the Turbo family up into the chat window as well. I just saw a user asking for it, so no problemo. All right, so just keep in mind this family of turbo breaks is looking for stocks that, well, let's just say this. It's guaranteeing that when you pull the stock up, there's not going to be any resistance on the daily, simply because it has to be at 100% of its lifetime high, not just 52-week high, but lifetime of the stock. So that's one little check we can check off right off the bat. That's a positive attribute. Then we find our favorite intraday pattern to get us into the trade, whether it's a range break or any other type of intraday buy signal that you like to play. So keep that in mind with the Turbo Breaks multi-strategy family.
Right. And that can also be a great indicator when you start seeing fewer stocks appear in there, and you start seeing, like he's showing you today, where some of these are not following through and there's more selling coming in. Little things like that can kind of sometimes point toward, hey, this is a market that's getting tired. I'm seeing less stocks come in here. The ones that are not really following through like I've seen in the past. So, little things like that can really hint you to what price action that may be coming down the road.
Right, and before we bring Scott in, because I know we are getting to the end of the hour here, which, wow, it's 5 minutes left. So let me say this in closing. Whether it's a Holly trade or whether it's another trade that you picked today, let's just use Arch Coal as the primo example. 5-minute candlesticks. This stock did this today. Now, it did this today without any magical studies on my chart, like a Fibonacci or a Bollinger Band or a moving average or any of that stuff. Now, don't get me wrong, I'm not saying that they're all worthless, just most of them, all right? So keep that in mind. I didn't use any of those metrics. Well, I can't say I didn't use any of those metrics. We use our filter sets, which are some of those metrics. But when it comes to charts, this thing did this thing without anything on the chart, right? So just keep that in mind. If it's part of your equation, that's one thing. This is the animal we're hunting. Part of that animal consists of this filter set right here. But when we're looking at the charts, it all happens. It doesn't matter if there's any moving averages up there or not, because a lot of people react off of those studies. So just think on that, I'm not knocking all the studies, I'm just saying think about that when you're thinking about your charts. All right, so Andy, unless you have anything to add, I think, Scott, we're ready for you.
Yeah, just make sure you guys come in tomorrow. I'm going to be hosting the Trade of the Week. We'll talk more about Siri, the Trade of the Week tomorrow, and got some other good nuggets for you, so see you tomorrow.
Yeah, sounds good.
Okay, Scott, let me find your slide here, and we'll be in good shape. All right. I believe I'm on the right one. Yeah.
Did he lose his audio?
I'm not sure.
You might have to.
Okay, well, I'll just kind of fill in until Scott's able to either come back in or not. He's been having some issues. Go to assist myself and Dan Merkin, CEO. But we're always actively looking for you back, Scott?
Yeah, no, it wasn't responding. Okay. Yeah, so we have a podcast on Fridays. Do make sure that you're subscribed to that. Just search for Trade Ideas Podcast in your favorite app that you use to listen. It's easy to find. We had a good one on Friday with Jamie and Dan. And do make sure that you're subscribed. Get the latest episode and get the next one that comes out on Friday. We are also wanting to make sure that we have Brokerage Plus if you're an interactive brokerage client. Just shoot us an email if you want some more information about that, info@trade-ideas.com. It's in the beta. If you're an interactive brokerage client, you can automate your trading or do gray box with your strategies. It's been out there for a little while. I need to check in at the tech meeting tomorrow and find out exactly which version it's currently in up until, I think it might actually be in the production version. But it is all free for now if you're a premium member and an interactive brokerage client. At some point in the future, though, we will begin charging for it as an a la carte option. So if you're using interactive brokerage and using Trade Ideas, you should at least check it out and see if it's for you, because it will be an add-on at some point that'll be over $1,000 to get the license for. So if you're using interactive brokerage and Trade Ideas, it would behoove you to give it a shot. So we do have a sale that's going on until midnight tonight for huge savings. 22% is what you can save off your first month or year of trade ideas or your first month or year of upgrading from standard to premium with that code test driver. We extended this to everyone after the test drive event the other week, and it will go until midnight tonight, so be sure to use that. By then, you can download a PDF that has this information and some other information from the webinar by going to the handouts panel on your GoToWebinar platform, expanding that and clicking on the download. We have another code also that's going to be good in August, and it's also good tonight. So you can always use AI trades. If you dilly-dally and wait past midnight and still want to get on board and save some money, it saves 15% off your first month or year of trade ideas, also usable to upgrade from standard to premium. And remember, both standard and premium include a full hour of one-on-one concierge service training with Jamie or Andy or Steve. So don't forget to do that once you become a subscriber and spend a little time using the software. We recommend a week or two using it before you actually go into the training session, because that way you'll have questions and you'll know what you want to find out and make the most out of that hour. Any questions, just email us info@tradeideas.com, or you can shoot Andy or Jamie an email directly. Jamie is jhodge at, Andy is Andy at, and you can find us on Facebook, Trade Ideas Pro on Facebook. Follow Jamie at QuantBot on Twitter. Steve Gomez is at Today Trader. And Dan Merkin's at Trade Ideas 1. Thanks, y'all. We'll have a recording up later on. And stay tuned to your email for a reminder about how to find that in the
Alrighty.